The US-China trade war began in 2018. Then President Donald Trump imposed tariffs on billions of dollars worth of Chinese goods. The goal was to protect American jobs and intellectual property. China retaliated with tariffs of its own, targeting American products like soybeans and automobiles. This back-and-forth escalation created significant uncertainty in the global economy. Businesses and consumers alike felt the impact. The tariffs covered a wide range of products. For the US, these included steel, aluminum, electronics, and machinery. China targeted agricultural products, chemicals, and automobiles. These tariffs raised costs for businesses and consumers in both countries. The trade war also disrupted established supply chains. Companies had to scramble to adjust. The stated aim of the Trump administration was to reduce the trade deficit with China and bring manufacturing jobs back to the US. However, the effectiveness of these tariffs in achieving those goals has been widely debated. Critics argue that the tariffs hurt American businesses and consumers more than they helped. They also point to the fact that many manufacturing jobs have been lost to automation, not trade with China. The initial volley of tariffs in 2018 marked the beginning of a protracted trade war. This conflict has had far-reaching consequences for both the US and China, as well as the global economy. The US-China trade war has had a mixed impact on the American economy. Some sectors like steel and aluminum saw a short-term boost from the tariffs. However, many others, such as agriculture and manufacturing, experienced significant challenges. Farmers in particular were hit hard by retaliatory tariffs on soybeans and other agricultural exports. The tariffs also led to higher prices for consumers on a wide range of goods, from washing machines to cars. This contributed to inflation and reduced consumer spending power. While some argue that the tariffs helped protect American jobs, others contend that they led to job losses in certain sectors, particularly those heavily reliant on exports to China. In response to these challenges, some American businesses adapted by shifting their supply chains away from China. They explored sourcing options in other countries like Vietnam, Mexico, and India. However, these adjustments took time and often came at a higher cost. The trade war also spurred some American companies to invest in automation and domestic production to reduce their reliance on Chinese imports. However, these shifts are long-term processes that did not fully offset the immediate impacts of the tariffs. China felt the pressure of the trade war but responded with a multi-pronged strategy. It sought to mitigate the impact on its economy while also working towards reducing its dependence on the US market. One key aspect of this strategy was strengthening relationships with other trading partners. China ramped up its engagement with countries involved in its Belt and Road Initiative, expanding trade ties across Asia, Africa, and Europe. It also deepened its economic cooperation with the European Union and ASEAN countries, seeking to diversify its export markets. This strategic pivot allowed China to partially offset the decline in trade with the US. Beyond seeking new markets, China accelerated its push for technological self-sufficiency. The government poured resources into key sectors like semiconductors, artificial intelligence, and electric vehicles. The aim was to reduce reliance on American technology and build up domestic champions in these critical industries. While facing economic headwinds, China used the trade war as an opportunity to advance its long-term strategic goals. It aimed to bolster its position in the global technology race and reduce its vulnerability to US pressure. The US-China trade war extended beyond the immediate economic impacts on the two superpowers. It reverberated throughout the global economy, leading to shifts in production, investment, and geopolitical alliances. Countries like Vietnam, Mexico, and India saw an influx of manufacturing activity as companies sought to diversify their supply chains away from China. This shift in production contributed to economic growth in these countries, but also raised concerns about labor standards and environmental regulations. The trade war also fueled uncertainty in global markets, making businesses hesitant to invest and expand. This had a dampening effect on global economic growth. While the US managed to reduce its trade deficit with China to some extent, the long-term winner of the trade war remains unclear. China's economy has continued to grow, albeit at a slower pace, and it has made significant strides in technological advancement. The trade war highlighted the deep economic interdependence between the US and China. It also underscored the complexities of managing this relationship in an era of geopolitical competition. The long-term consequences of this trade war will continue to shape the global economic and political landscape for years to come.